See, this is a good team.
Hi guys, welcome back to another episode of Chart Talk with Jake and myself. For ideas, market outlook, good trade, bad trade, as well as top day of the week. But before we get into that, Jake, we got to hear what happened in Japan.
Oh man, it was the trip of all trips. Wild times out there. It's pretty scary going with the coronavirus running rampant through Asia. But super fun time. I'll give you a couple quick funny stories. So we're all meeting in Tokyo, me and all of my friends, and then we're flying after the first night up to Niseko where we snowboard. So you know how it is when you see everyone the first night of vacation. Everyone's way too excited, so you get way too messed up that first night. And so we had a flight in the morning after getting all messed up, and we go to the fish market before our flight, just getting like hand fish, cut off the fish, served to you straight, and they just start feeding us sake. I'm not sure if they do it to everyone, but they did it to us. So by the time we're going to the airport, we're all pretty dialed in. So we're going through security at the airport, and this guy is speaking to one of the security guards, speaking Japanese to one of my friends, and he keeps repeating himself. And my friend is like, yes, this is my bag, And the guy keeps repeating himself louder and louder and louder. You can tell the guy's getting super angry. So then all of a sudden, 4 officers come out of nowhere and just start searching us all, just like patting us all. I'm like, what the hell is going on? So an English-speaking security guard finally comes over, and he's like, what are you guys doing? This guy keeps asking you if you have dangerous goods, liquids, maybe bombs, whatever. And your friend keeps saying, yes, I have them all. So against all odds, we got that one solved up and made it through security. Yeah. He's like, I have them all. Yes, this is mine. So then the second funny story is, so you know how snowboarding trips are synonymous, hot tubs.
Yeah.
They don't have any hot tubs out there. They have what's called onsens, and what they are, it's these like hot springs, and they're beautiful, all in nature. They have them in the back of hotels and things like that. So, after day 4, we're all so sore. We're going to an onsen. We're psyched. We got our trunks on, got our little towels. We're going there, and we go there, and we find out it's butt naked, and it's split up between men and women. We're just like, oh my god, like what? Like we have to go in this butt naked jacuzzi with. So we were going to bail, but the first rule of trading, you buy the ticket, you take the ride. So we went in there, and there's about 100 Asian dicks, and it was really uncomfortable, But it was a great experience. We only went once, but I have like 100 more stories to share, but that's for another time. But all in all, an amazing trip, amazing country, and I made it back without the corona, I think at least. So can't be too mad.
Yeah, it was a great time.
Yeah. Let's talk about the market now.
All right. We'll jump into the market outlook.
All right. Let's do book of the week.
Okay. All right, Jake, what do we got for book of the week?
All right. So I read this an article about the story over in Japan, and I bought the book, and I cannot put this book down. It's called White Devil. It's the true story of the first white Asian crime boss. It's about this dude who grew up in Dorchester, Boston, which is like the Bronx of Boston. Pretty much an orphan, and he got taken in by the Chinese mafia in Boston, and they don't let anyone in or anything like that, and he rose the ranks, and it's just such an incredible, captivating story. I can't put it down. I read like 40 pages the first night. Just like so many cool aspects about it, but nothing to do with finance or trading or anything like that. Just a really great read. What do you got for me?
So mine is definitely not a book that I can't put down. It's Power of Intention.
God.
Another.
You're okay. You're reading all these self-help books. Do you want to talk? Is everything good on that side?
Well, I have a conspiracy that with certain books, they always name drop a certain title. Like, you have to read this book. So they always drop these titles. So the last book, they name drop Power of Intention. So I'm like, oh, fuck it. I'm going to go buy Power of Intention. So it's in that similar space, just talking about the positive energy, and stuff like that.
Manifestation.
Yeah, and there's a couple good lines in the book. I don't have the book with me. It's in the car. So this one's a little bit better than the Shock and the Dogs, the previous book.
Yeah.
But not as good as the Mafia.
No, dude, this book is crazy.
Yeah. So if you want enjoyment, read Shake's book. If you want to become some energy guru, power of intention.
Yeah. Yeah.
So I think with that, I think we wrap it up until next week.
All right, a
Guys,
little thumbs up, a little like, can't hurt. Can't
we'll
hurt. Till next week.
see you guys.
All
All
right.
right, so I can stop end the recording.
And you stop recording. I'm going to record the next one.
All right.
Let me switch.
So, I mean, very simply, where this market is just still in absolute breakout mode. I mean, we just broke a major level a few months ago, and we're kind of trying to call tops and stuff, looking at daily candles, and just from a macro perspective, the market's still going to rise. I think there's three names you really got to key in on to see for the market, and that's Amazon. Amazon's breaking this monster level. We're going to talk about that in a bit. There's Google, one of these two of the biggest names in the market, just breaking huge weekly levels. And then Microsoft continues to lead this market higher. So, I mean, as long as those three names continue to break out, I think, I see us remaining in this uptrend. What are your thoughts?
So I was talking with Sam this weekend at Creek about this, and we talk about, we talk about like Mickey Mouse flags, where, near bases, like, when no one wants to buy the stock, it takes so long for the base to break. And then it forms its first flag, and then its second flag, and its third flag. And as you continue to form these flags higher up, the crowd just gets less patient. So we saw that with the SPY last week, where it ran up to 332, pulled back, and then once it ran back to that prior high, we expected to it get met with some resistance. But since we're so late into this run, everyone wants to get in and just keep pushing the market higher.
Right.
So we just keep getting those up moves, and we have to just keep riding it, as long as we can.
All right. Let's jump in. What do we got next?
So we got member ideas. We got Roberto, first name. You have one of your favorites, Verizon.
Ooh, Roberto, my man. So much like Jim Cramer talks about, own Apple, don't trade Apple. That's really the way I feel about Verizon. It's a super long-term hold for me. I'm not looking to sell anytime soon. I'm looking to buy more on dips. Everything in the 5G space they're doing, and I love being a customer. I'll be a customer for the next 20 years. So own Verizon, don't trade it. I don't want to trade this name. It's nothing really there for me.
Yeah, there was I forgot one of the guys in the chat this past week. When you were away, he was buying it. I don't think it was Roberto, someone else, but they were buying up off 58.
Uh-huh.
And like if you were to want to get into this name, this is a name where you do want to buy it up off of
Support, yeah.
It's a really name that you want to be buying like 61 and having it be perfect in it. This is one where if you can buy it up 58 and get some, maybe not tomorrow because it just dropped 3% yesterday, but with this type of name, you want to get it up off support, not really buying resistance.
Definitely agree. What we got next?
Next is Uber.
Uber. All right, so Uber's a name I'm coming around on. I just came around after these earnings. I'm not as much worried about their profitability or things like that. I'm not that smart to worry about that. I just know their growth has really ramped up lately, and this quarter proved it. So now we're seeing the nice little cereal bowl come to play. So ideally, what we want to see, we're seeing the cup. We need to see a handle formed on this chart. Maybe under this 42, maybe under this 46, wherever it may come. I'm not going to buy this move right here through earnings highs, but I do like the name a lot. So I'm going to be stalking this name over the next few weeks. I just don't think it's ready quite yet. I'm really hoping it gives us a lot of sideways, a couple weeks for a little entry because I think this one's going to turn up soon.
Yeah, I mean, it reminds me a little bit similar of Facebook when it came out back in 2013. I don't know if you can zoom all the way back to
I could zoom.
The main takeaway with Facebook was, throughout the initial IPO process, everyone hated the name.
Disaster.
Next MySpace, it's the next Friendster, blah, blah, blah. And then, it took about a year or so. And once they got through that IPO high, that 44 level, it never looked back. And that was kind of something similar with like Uber, Lyft, even for like Snapchat. It's, when those names can eventually get back up to those prior IPO highs and break through, that's when, that's the real time to really get into these names because that's when there's, again, no overhead resistance and they've had enough time, they've had some earnings behind them to really get going.
Right.
So that's something for me on the road. I'll definitely keep an eye on that.
Nice.
Next we got Golem. He's looking at SPSC.
Oh man, I've traded this name a few times. It's so painfully thin. It's so difficult to trade. I really like the weekly chart and the macro chart. I think it looks like it moves higher, but for me, I've traded this name. It's like, volume will come in and then it won't trade for the next hour because it only does 100K a day. If we look at the last 3 days, it's done. What is that? 112K. 196 is like a bigger day for it. 100K and 97K. So like when a name is doing under 300K volume a day, it's just going to go through these periods of like 30 minutes where not a trade goes off. So it's like if you have a stop in and it triggers your stop, you're going to get filled $1, $2, $3 lower than you even anticipated. So your real risk in situations like this and names like this is a lot more than you can really anticipate. So I've been looking at this name for a while, but it's kind of turned into an avoid for me. I like the macro chart. If you take it smaller size through 60 and give it the room and treat it like that, then maybe. But I'm not going to attack this name with size because of volume levels.
And even that volume is like the whole alpha chat could be the daily volume.
Right. Yeah. And that's scary.
Yeah. Next up, FTAI through 20. If we zoom out to 2018, we can see that.
Oh, yeah. That's a really nice level. Yeah, I mean, I have no problems with this chart. It had the nice run up to the level, this 20, this macro level, and then it's kind of consolidating. Like 2 or 3 more weeks would really make this perfect. I like that the magic number is usually like 6 to 8 weeks in a flag. But through that 20, I mean, I have nothing bad to say about this chart.
All right. And then next we got CBNS.
Oh, I love this chart. I spent some time looking at this chart last night. This is probably one of the best charts out there right now. It's just a really well-formed cup and handle, trying to break higher. They just had earnings, right? Yeah.
Earnings today.
Oh, there's earnings today?
Yeah.
Oh, I thought they had earnings out of the way. Oh, that changes everything.
Yeah.
Oh, okay. Well, all right. So I'm not gonna look at this name until after earnings now. I was going into today like with this top of my board. I thought it had earnings already. And once it gets those earnings out of the way, we can see this nice cup it's got, and then this little handle it's trying to develop. So once it can sustain a move through 76, preferably after earnings, I like this one a lot.
And then next up we got SPAR.
Spartan Motors. Yeah. Wow, this is a really nice flag. Nice little macro level below this 19 area, and then it's got this really well drawn out flag. Is that any earnings? Earnings haven't come out yet, but this upper level flag, love it, absolutely love it. So through this 19 quarter area, definitely looks really good. This is like a textbook beautiful bull flag right here.
It looks almost same as that FTAI.
Right.
$1 cheaper. Okay, he's looking at IRTC through 90.
Let me see earnings. They just had earnings? Let me see that.
I think it's today too.
Jesus. All right, so I mean, we'll see what these what's to come with these earnings. This is like one of the things that we really love is a level before a macro level, where it's like this 98 has a huge macro level, and then this 90 looks to be giving an entry. Very similar with Amazon. I mean, very different names, obviously. Where Amazon had that 2000-ish level, and then you were able to buy this 1800 area and get in before the level, so you don't have to buy the level as much. That's why we like the level, because it gets really the level before the level, because it gets messy buying that macro level because everyone in the world's staring at it. So if this has good earnings, you know, and it can blast off through this 90 area, it can definitely be a great opportunity, but it all depends on the earnings reaction.
Yeah, definitely agree. Next up, we got Alex Smith looking at AFLAC, AFL.
Yes, I love this name. This is I put this on the shakedown this week. Really tight consolidation. Has earnings out of the way. What is it? 53.50 area. Just love the tight consolidation. Love the moving average consolidation. I'm not expecting this name to rip to new highs very quickly. But from a macro standpoint, this is a really beautiful swing trading location for a chart. How it's sitting atop all these moving averages, consolidating for weeks on end, giving you a really tight risk entry through that 53.50. Really like it.
Yeah, I like that one as well. Let's see. Next, we got CBOE.
CBOE, the global markets, huh?
Yeah.
I just never trade these names. I've never traded this name. Whereas he probably likes to do this like a little 125 area before the 128.
Yeah.
Yeah. I mean, it looks okay. It's a nice little level. I don't really know about the name that much, so it's a pass for me.
Yeah, we'll switch to you probably like, which is going to be this Clorox CLX.
Love this. Love this Clorox. So, and I love the sell-off yesterday. So we see we see this huge macro that's in this huge macro channel. And now this day was earnings, this explosive day. So we know this name has earnings power. So this is the exact thing we need to see for this name to be able to break out of the space. It should have the volume. It should have the buying because on earnings day, it showed us it wants to be powerful. So it got to level 2 quickly. As we just talked about in that last chart, we don't want to buy this level because it gets messy. But because we see that it sold off yesterday, it's likely going to give us this flag before this 168. So I am going to be absolutely stalking this name over the next few weeks. When it wants to break that 168, I am 99% going to be in.
Same with you. I love this chart. Looks great. Let's see. Next up, we got Carly B looking at Honeywell, HON through 180.
Honeywell looks pretty good. I like this uptrend right here. Yeah, I mean it's steady uptrend. Can't knock it. They got earnings out of the way. Do that 180. It's good. He's more macro with certain names, so I know he'll give this the room to a 170 or whatever it needs. So if he's taking it in that sort of trade, then I like it. If he's going to try to take it and try to be perfect, I don't like it because this is, you just want this name to get back in the uptrend and grind slowly. This isn't your 10% a day name.
Yeah, no, I definitely agree. Let's see, next we got Daniel looking at CCEP through 54. Coca-Cola in Europe.
Coca-Cola in Europe, huh?
Mm-hmm.
Let me get a sec to look at this bad boy. They have earnings coming up. They had earnings February 13th. It's February 12th. So just on that basis alone, it's a pass. If this was an earnings gap and it was a flag and it was trying to break through that 200-day simple moving average, then it'd be good. The thing I do like about this chart is this 53, 54 area was a support level. Then it broke under it and was resistance. So if it can sustain a move through it and then turn it into new support again, then it should get back into that uptrend. So usually we like that looking in. But the fact that it is earnings in a day, then it becomes a pass.
Yeah. Similar chart-wise, just recent IPO is Domo that he's also looking at through 26. DOM.
They didn't have earnings yet. Yeah, I mean, very similar chart. I like how it's trying to reclaim the 200-day simple moving average. That's always very important in a name. But just an name to me, and we've already gone over so many good charts, so that becomes a pass. Just knowing what else is out there, and this is just like,
Yeah, I got you. Next up, we got Anna. She's looking at WWD.
Hell yeah.
120.
Like this WWD a lot. Oh, lost it. All right, I like this WWD a lot. Just had earnings. It's turning this 114 area, 115 area into new support, and it's still in this really tight consolidation. So oftentimes, earnings names, they just explode away, and you don't really have tight risk opportunities. But this name is really tight, and it's just consolidating even tighter. So once it's able to break this 120, it should be a great risk-reward opportunity because we're getting it so close to that support level. So that's the reason I really like this WWD. I'm with her on it fully.
Yeah, it looks great. And another idea was this SAH, Sonic Automotive, through 34.
Sonic Automotive, huh? It looks good. I like the upper level flag it's working on here. It needs to tighten up on the daily before that 34 for me. So that's really it. If it can consolidate more before that 34, then I like it. But right now it's still a little wide and loose for the name.
Seems like the real ad is like 28. And that's
right. I'm not buying 34, giving it a 28 in this name.
Let's see. Next up, we got Tyler Kenny looking at IDXX through 280, 290. 285, I'm sorry.
Yeah. So I love it through 290. I'm just not sure if it's ready through that 285 yet. It seems like you're going to need a lot of help for that 285. And I'm usually, as we said, we love the level before the levels. I just gave a whole little spiel on it. But this one seems like it needs a lot of help, whether it be market help or you really need this one to be strong today for this one to work out. So I'm in the camp of just waiting for this 290 in this name. I'm sure you're in the same camp.
Yeah.
Yeah.
This reminds you. This reminds you of Clorox, like a month trading wise ahead. Like where Clorox hit 168 and pulled back. That kind of reminds you of like this beginning of February where it ticked 290 and pulled back, and it just kind of like just jerking around, but it just needs a little bit more time to really set up and push through that 290. And it just to get in here 285 just seems like you're gonna get shaken out before it actually goes because it's still very wide. It's still got 30, 20 points
Yeah.
between the real out. So it's tough to kind of sneak in when it's not really ready yet.
Yeah, definitely agree.
Let's see. We got Wolvert looking at CIEN through 44.
Hell yeah. I like this one. We're just waiting for this one to definitively break through this 44. I mean, nice little earnings flag. This is like a kind of a textbook earnings flag where it has the huge bar showing us that it's strong, and then it consolidates for the next 4 to 6 weeks, whatever this was. So if it can finally sustain a move through this 44, I like it, but not a name you want to be early in. Just wait for that break of 44. Wait till you see that volume rush in. But when that time comes, I like it.
Yeah, this is one that I even took back in the end of January through 43, and I got stopped at 42. Just flush up to 44, didn't go. But I'll be with him. I already have like a 44.05 buy stop.
Oh, nice.
I'll be in that with
All right.
with you, Will. Next up, we got Greg M. looking at BCE through 48 half.
V?
BCE.
Oh, BC.
Telecom.
All right, so I really like the bar it had on earnings. First off, I like it going after this trend line resistance level. I like the level. It just needs more consolidation for me. I like that it's setting up below the earnings day highs. We love that setup when it sets up below that strong earnings day highs. But like that CN we saw where we had that great 4 weeks of consolidation, that we want more consolidation out of this BCE. If we don't get it, I would probably let it go personally. But that's just what I look for to make this a really great setup. Right now it's like a decent setup. To make it a great setup, just give me 2-3 weeks of sideways, then go after that 48, 49, 48, 50, 49 level.
If you can actually, if you put up like a weekly and zoom way out, and this 49.
Oh shit! Holy
shit!
shit! I changed it all. I changed it all. Wow, what a chart!
Crazy.
Look at that. How
As
the
I
game
zoom out, I
changes.
was like, it can't be.
It can't be. First time created the level, 2013. Oh my goodness. Wow, good job on him. Nice
Someone's been
charting.
waiting for this for a long time.
Yeah, I mean, so now if you get the trigger on the earnings catalyst for the 7-year level, that's always very positive. But again, a telecom name, don't expect this to be at 60 in a week. Expect it to be at 60 in a year type thing.
Yeah, exactly. So, great job on
Great job charting. Great job.
And then we got, rounding up the member IDs, we got Tommy Bridwell looking at SPGI through 301.
To S&P Global. Just every stock. We can't go down. I mean, this is more of like an index to me, the SPGI. So I'm just not going to, I'm not buying indices.
Yeah. CHTR.
Charter.
Yep.
I do like this one. And these cable companies are all moving really well. I don't know what the news is. That Dish got bought out or something like that yesterday. Whatever it was. But so it had the big earnings move, and then it's just really tightly consolidating, turning those all-time highs into new support. So this could definitely move higher against this 520 in a really nice uptrend. Nothing negative to say.
All right. We got to the member ideas. Now we have a couple of questions. Some members, some follow us on Instagram, so we can jump into those.
Let's run through them.
All right. So we got JJ Wickman. He's asking, how much do we typically keep for cash on the sidelines for new opportunities? Is it like a certain number?
So, how do we determine our cash levels and how much we're invested in the market? Pretty much. For me, it's a lot of feel and it's a lot of market internals. What I want to do is I type up sectors and I want to type up all the names in the sectors and see how they're moving as units. And if I'm seeing sectors break out en masse, then that's really positive to me. I'm going to be much more inclined to have a lot of risk on and be fully invested than if I'm seeing a lot of chop or volatility, things of that nature. So for me, it's seeing market internals, and then it's kind of a feel thing over time. I don't have specific numbers where it's like, if this is down this percent, then I only want to be involved this much. So there's a lot of feel involved in my trading, but I say it all really has to do with the market internals and how the strongest sectors are moving as groups.
Yeah.
For you, what is it?
I mean, I see a lot of the guys in the beginning where it's like they just try to like clean up positions by Friday and then randomly get back into stuff on Monday, where I don't really care about that stuff. It's, broadly speaking, it's time in the market versus time in the market is much more important.
Right.
And usually for how we're swinging, as I'm upping stops, I'm usually at some point getting stuff that does something. So I usually always have some type of cash on the sidelines. Um, I'm just trying to always just put that money back to work as quickly as possible. Recently, the last few months I've been much more heavier, much more concentrated in certain positions like Amazon. And as we're starting to get more and more extended in this up move, I'm starting to get a little bit lighter and a little bit wider with some of the entries, so I don't have to be like as perfect. So hopefully, but like you said, it's kind of just feel. There's no like I have to have 5%, I have to have 10% in cash. It's just kind of how the market is and what opportunities we're seeing out
Yeah.
there. Okay, so next up we got at Daniel UYB. He goes, my girlfriend's been trading forex. She uses harmonic indicators and a bunch of other indicators. And I'm trying to tell her it's a get rich quick scheme. So, our take on forex again. Forex is not a scam. It's a huge market. But what you see on Instagram and how your girlfriend probably got into it is where the scams usually lie. And the reason for that is with forex they kind of pry on, unfortunately, like the poorest people, because with forex you can get insane leverage. So if you have $100, we'll give you 100 times leverage, 1,000 times leverage. So you think that if this currency pair moves up a tenth of a penny, you're going to double your money, but you tend to forget that if it goes down to a penny,
Yeah.
you're
You're
going to blow
fucking
up.
debt.
And that's not even the biggest part. It's what we see all day long with all these forex pages that look all identical. Give them $100, they'll give you back 1,000. Those are just scams where they're promising you an insane return in such a short period of time that just no one really could achieve 1,000% return in a week. So what happens is you're going to talk to that person. They're going to have this custom broker or this special broker that they use, and they're going to want you to Western Union them the money, or send them the money in such a way that you would never send money to a traditional bank that way.
Right.
And as soon as you send them that money, that's the end of the scam.
Yeah.
We've even seen some like really high-end, high-level scams where they'll give you basically a demo account, and you think you're trading with real money, and you're going to eventually blow up on your own anyways. But they'll give you $1,000 in buying power, you'll lose it, and you'll think you actually lost your $1,000 when you were trading on demo, and they just took your $1,000 from day one. So we just see a lot of scams in that space. So that's just why we tend to avoid it. We trade stocks, and I can't think of one currency pair that's up 100% a year when we have guys like Sam who made 300% in Tesla. So a lot of reasons why we just avoid it.
All right, what's next?
Next up we got Vish Jan 91. He's looking at WWE.
Oh! I wish I had some good news for him. I love WWE. Grew up watching wrestling, but as we can see here, it's just. All right, hold on. Let me get some lines out of here. As we can see, I mean, it's completely bottom right chart. There's no demand for the stock. What we most simply want to see out of stocks is demand. And how do we show demand? It's top right. It's constant buying. The stock just gapped down on earnings, continues to get sold off. Again, I love WWE, so it pains me to say this, but this is not a buy anytime soon until further notice.
For him, he's looking at it where he's like it was at 100, it's
right?
At 40. I'm gonna buy it at 40 and sell it at 100.
Discount.
And realistically, what's gonna happen is he's gonna buy it at 40,
sell it at 20.
and it's gonna go to 20.
Yeah.
And that's just unfortunately what most new traders tend to do is they see the deal that already happened or the best trade. Like people who are going to see Tesla at 900, they're going to be like, oh, I'm going to buy it when it gets back to 300.
Yeah.
And it's really not how it works, unfortunately. Next up, DD War. I don't know these guys' names. Anyways, DD asked, what's your turning point that makes you go from bullish to bearish?
On a stock? For me, I mean, earnings season is going to be my heaviest volume time of trading personally. So it's really the reaction earnings. So this WWE is a perfect example. Gaps down on earnings. That name falls off my radar. I don't really want anything to do with it. If the earnings were great and it gapped up to 80 and it began to flag out, this name would be at one of the tops of my radars. So in the most simple sense for me, to be bullish or bearish on it. Oh, camera.
That's fine.
In the most simple sense for me to be bullish or bearish on it, it's their reaction to earnings. It's not as much their earnings, their sales number. Obviously, I want to see growth, blah, blah, blah. But everything comes down to price action. And, I want to see that earnings gap up. As we can see, Amazon, boom, gaps up on earnings and goes runs to all-time highs. That's the kind of things I'm looking for. So earnings reaction for me. What about you?
I think even if we keep up that WWE example, the main thing that we always focus on is the stock being top right. So if we're looking at this WWE and you look at like mid 2018 where it does gap up on earnings and it's at 50, and at that point it's all-time highs. It's technically in the top right of its chart, and it gets basically 100% move from the most expensive price it was at on an earnings day. With the new traders, like it's at 50, it's too expensive.
Right.
I can't buy it. It goes 100%, and the new guy now wants it back at 50 on the way down, thinking that, back then he wouldn't buy it, but now he wants to. So it's for us, it's just top right. What you think is expensive. Those are the charts that we tend to focus on, and the ones that are cheap, that are these amazing deals. We are never touching those, and that's usually, even I think when I first started, that's all I looked for was trying to buy if it's too low, which is just a horrible strategy.
And going right back to that demand conversation we have, if you look at this back in May, June, whatever that was, the gap up to 50, it's like buyers are tripping over themselves to buy the stock, which is like hedge funds, whales, all the biggest people in the market. They cannot get enough of the stock. That's why it's going on this hyperbolic move. If a stock gaps down, you're never going to get that type of reaction. You're just never going to, because the demand isn't there. It's, very simple supply and demand equation sometimes.
Yeah.
What's next?
Next up, we got Zach Hendler, ETSY, Etsy. Etsy like 52, but it's into that like gap fill area.
Yeah. Just filled the gap. I mean, decent name. I had such high hopes for this name back in the day, and their earnings never kind of matriculated. But even so, like what I was just saying is the gap down on earnings is just going to turn me off to the name. Now, could this name work? Yes, absolutely. But that's not where I want to be with my risk. So just based off on the gap down on earnings and it not being immediately bought back up, it turns me off to the stock. I keep it that simple.
Okay. Next, K Sitter 1, looking at ENPH.
Damn. So I want to tell him I like the stock, but so all right. So definitely the right stock you want to look for. These top right charts, ton of demand, very strong name. But when I look at a chart, the first thing I want to look at is where was the last buy? Where was the last right, proper buy? And to me, it looks like it was this 34 right here where it extended and now it's continuing to run. So he just kind of missed this move. If it goes sideways for 6 weeks, then buy that 40 for sure. But you missed this one. The buy was at 34, and now you're just kind of late to the move. So I like the name he's looking at. It's just timing was a bit off.
Yeah. And now if he is in, because he didn't.
If he's already in, then great.
Yeah, if he's in it, just like stop below 35 and
yeah.
Let him go. Jay Fox was asking about Netflix.
Flix, he wants to buy it?
I believe for 380.
So I definitely see this macro level that he's looking at, but similar to that last conversation we went to, where it's like, where's the buy in this name? And the buy to me was very clearly this day right here, this 345 area, and ever since it's kind of running right into that resistance level. So if it gets that sideways action before the resistance level, then I would definitely say it's still a buy. It still could rise, still could break through that level and bust through all-time highs. But, is the risk reward on your side buying that 380 right now? I don't feel it is. My goal in buying stocks is I want to buy them out of the tightest consolidations so that I know that my risk reward is the best it can be. So buying this 380 now, it's like you got to give it to 340, and to try to make, you're risking $40 and to try to make $200. Oh, your camera's back. Hello.
Oh, nice.
So it's just, the risk reward isn't right now if he wants to buy it today. It could break out from here, but that's a name I'm going to pass up on personally because it's not coming out of a tight consolidation. I think you missed the buy in that one.
Mm-hmm. Yeah, no, I definitely agree. Let's see. Next up, we got Anish_Nix. He's looking at ECPG.
Encore Capital Group, huh?
I never heard of.
Yeah, I never really heard of this name. They have earnings February 18th. So, I mean, we'll see what these. It's going to be all dependent on this name after earnings. I wouldn't touch this name until earnings. But if they have great earnings and they gap up and want to take out that 38 with this, given this nice little base, all the moving average is very consolidated, then yeah, that'd be a good setup. But again, very dependent on the reaction to earnings. and I wouldn't touch it before earnings since they're a few days away.
Next, we got Francis SB 257. He goes, I have $30,000 to invest. I'm not sure whether I should put it into one name or if I should split it up into a few.
So, Spy 337, the time to get in the market for the first time. So for me personally, and this is where we can have a decent little conversation about this because we have very differing styles. I'm going to be very concentrated in my portfolio because I'm looking for the very aggressive returns. I'm going to split my names up into 4, 5, 6 names and really try to attack them with risk. But I would never do it into one name because throwing all your eggs in one basket, that's a disaster scenario. But so for me, it's like 5 or 6 names, but I'm sure for you it's a little different.
Yeah. I mean, it's just if you were to put it into one name, it's like in theory, unless you pick an absolute garbage name, like you pick with real stock, in a year you can be up 100%, you can be down 80. Like that's the range you're going to be in.
Yeah.
And if you can't stomach that realistic volatility, it's like you move over. Okay, for 2 names, maybe it's 50% or down 50%. And as you keep moving over, you get to 10 names, to 12 names, 15, you're going to probably get as close to like average market returns, 6, 7, 8% a year. Now, if you're asking this question, you more than likely have not bought a stock yet, and that means that you're probably going to lose money doing whatever you do. Unfortunately, maybe you go to options and that money is going to be gone in a week. So before you put any of that money anywhere, I would start very light, and I would focus on learning how to invest first, because if that's the question, those are the questions where 6 months later the guy goes, I lost 20,000 and I want to learn. It's like, you should have just started from the beginning, learning the right way, versus trying to rush in and thinking you're Gordon Gekko. So yeah, definitely learn first, and start light. If you have 30,000, start with 3, and at least if you do royally mess up, it's not going to blow up your nest egg. Next up, we got E-Rich's little brother at Komensky Ross. He's looking at LVGO.
Oh, I keep everywhere I go, I keep hearing about this name, LVGL. I haven't looked into it yet. It's definitely given me the motivation to look into this. I like this little support level here at 24, and buying something on the way up of support, definitely always a positive attribute. This is supposed to be some recently new IPO that's a hot name apparently. I got to look into it more. So, but I don't know much about it. But from a technical perspective, through that 27 against this whatever these lows are, 23, 24 area, looks pretty good from a chart wise. Can't knock it. Shouts out to E-Rich.
Nice. All right, next up we got Chris Singh. I'll take this question. He goes, leaving my job, and the new job I'm going to doesn't offer 401k, so I cannot roll it over. So when it comes to 401k rollovers, you typically have 3 options. 1, you can leave it where it is. Your employer cannot force you to cash out your 401k if you're leaving. They don't really want your 401k because they have to pay for you as a participant, but that has nothing to do with you. So you can leave it. If your new employer doesn't offer a 401k, you can roll it over into, depending on how you contribute, into a traditional IRA or a Roth or a SEP. So you have options whether you can leave it as is, you can roll it over into IRAs, or if you go to another job in the future that offers a 401k, you can then later roll it over into the new 401k. So you always have some options. There's no gun to your head that you have to make a change. It just really depends on what you want to do. A lot of our members, if they do leave, a lot of times they'll roll it over into their IRAs and then they'll trade it themselves. If you don't have any experience, I would not recommend that. I would just leave it as is and let it just stay in the market. So that's my take on the 401k stuff.
Yeah, I don't know shit about 401k, so that's all you.
Yeah, you have yourself.
Never really had a job, so.
All right. So with that, we can jump into good trade, bad trade.
Yeah, I mean, I'm coming back from a 2-week vacation, so I got nothing to add. I'm gonna let you take this one over.
All right. So let's see. The one main one was this FLIR.
Fleur.
And this is going to be
the
so
it finally broke.
I know, and I sold Lily right off the open.
No.
So this was this is the name that we were watching this base. I got some up through 55, end of January. It pulled back, did not break the real out, which was 51. And again, we focus on in these types of trades, we try to buy back up off of support. So it comes into support, doesn't break, and I bought back up through 53. So I had original stock 55, stock pulled back in. I bought back in on the way up through 53, and I had like an average price of 54. Now, for me and for most people, this is kind of getting into the tax time, and for me, it's just freeing up cash to pay Uncle Sam. And this, people talk about how they love names. I don't try to love a name. It's just very indifferent. The chart's a chart.
Yeah.
And this is one that I didn't care about, where I just wanted to just get out of the position and free up some cash to, be able to pay my taxes. And this is probably the first time in I don't know how long that I had a limit sell order in, basically capping my upside, something that I tell pretty much every member not to do, my own mistake. And I had, a random like 54.89, limit sell. Yesterday off the open, it basically just gaps up and goes. And by the time I log in and see the order filled, the thing's at $56. And I'm like, I pretty much, sat through all the pain,
Yep.
and I'm missing all the upside.
Yep.
For a purely human, 100% my mistake, nothing to do with trading. So that was just like a kick in the teeth. And then for the good trade, it's just really been this Amazon. I had a couple of guys hit me up and probably hitting you up asking like, should I buy some up through 2050? Should I move my stop up to 1999? And this is one where, we did the heavy lifting a month ago or 2 months ago, where now it's just kind of sitting on our hands and being kind of as patient as possible. I still think this can go much higher.
Yeah.
So I'm not trying to micromanage it and have a perfect stop or try to add up here. Even if I do think it can go higher, the guys that have it with me, we have such a good price. It's just easier to let this winner really work and give it the time it needs than trying to trade it and top tick 2190 and then buy it back at 2000. I'm just not trying to do that in this name. Just trying to let it work and leave it. So those are the two main things for my good trade, bad trade.
And that Amazon, I mean, it reminds me so much of this Microsoft last quarter, where it had a really nice macro pattern and it gapped out of it our earnings, and then it was just a leader all quarter, and then they had another great earnings report, and it ticked new all-time highs. It opened at new all-time highs yesterday at 190, when just a quarter ago we were buying 140. So that's kind of, I think, the type of trade you have to look for in this name. You got to keep a really wide stop. You can't focus on, because it's a so expensive name, it's going to be up and down $50 every day. That's just how Amazon is. But if you can, take a long-term focus in this one, I think this has, this has legs, as they say.
Mm-hmm. No, I definitely agree. And with that, I think we can jump into top idea of the week.
Yeah, you can start. I know.
So I already know yours is PFPT as well.
Yeah, buddy.
So again, for me, it's going to be buying through 130 and then adding through 132. That's definitely the main idea for me. A few others. This YUMC is still setting up around 45, 46. Maybe we've traded a bit. Again, we talked about
CDNS. Yeah, I like that one, but I didn't know they had earnings. Are they? Oh, we'll talk after. But I'm definitely going to be staring at these earnings. This could be a great earnings ripper.
Yeah. No, I definitely agree. This is one where I already have the 130 buy stop, and then I'll have that 132.05. And if
What name are you talking about? I'm at CDNS.
Oh, I'm talking about PFPT.
Yeah, agree. PFPT got earnings out of the way, and they gave a strong reaction, so that's why I love it. And I think they're going to give us, it looks like with yesterday's action, they'll give us some more consolidation before it goes after that 130, which is just perfect to see for my time frame.
Yeah. All right. So I think we can jump into book of the week.
Yeah, let's jump in. We did it.
All right, Jake. What do we got for book of the week?
All right, so I read this an article about the story over in Japan, and I bought the book, and I cannot put this book down. It's called White Devil. It's the true story of the first white Asian crime boss. It's about this dude who grew up in Dorchester, Boston, which is like the Bronx of Boston, pretty much an orphan, and he got taken in by the Chinese mafia in Boston, and they don't let anyone in or anything like that, and he rose the ranks, and it's just such an incredible, captivating story. I can't put it down. I read like 40 pages the first night. Just like so many cool aspects about it. But nothing to do with finance or trading or anything like that. Just a really great read. What do you got for me?
So mine is definitely not a book that I can't put down. It's Power of Intention.
God.
Another.
You're okay. You're reading all these self-help books. Do you want to talk? Is everything good on that side?
Well, I have a conspiracy that with certain books, they always name drop a certain title. Like, you have to read this book. So they always drop these titles. So the last book, they name drop Power of Intention. So I'm like, oh, fuck it, I'm gonna go buy Power of Intention. So it's in that similar space, just talking about like the positive energy, and stuff like that.
Manifestation.
Yeah, and it's there's a couple good lines in the book. I don't have the book with me; it's in the car. So this one's a little bit better than the Shock and the Dogs, the previous book.
Yeah.
But not as good as the Mafia.
No, dude, this book is crazy.
Yeah. So if you want enjoyment, read Shake's book. If you want to become some energy guru, Power of Intention.
Yeah. Yeah.
So I think with that, I think we wrapped it up until next week.
All right, a little thumbs up, a little like, can't hurt. Can't hurt. Till next week.